Hello, everyone. Mike Zuber here, one rental at a time. And, something I think I want to talk about today is comparing a single family home with a duplex and with a fiveplex. The reason I want to do that is I'm sensing there is I don't know what it is, a market drive to the general feeling that more is better, larger is better. And maybe at some levels and maybe in most markets, that's true. However, as someone who owns a lot of those, I can tell you this is not a normal market, and I would be cautious. I think for the first time in a long time, a single family home investment is frankly the better return. And it pains me to say that, right? I'm someone who took advantage of some 1031 exchanges and, the crash and all these other things. But I only can deal with what the market's giving us today. And the reason I feel comfortable saying this is because I'm going to give you some actual numbers of deals I'm looking at and let you be the judge. And the reason I want to do this is because, again, one of my goals is to help people. I see a lot of people in my position, right? They were full-time employees. They've got this inkling that they want to get into real estate investing. And I'm afraid that too many of you are sort of following the herd. And, I'm trying to, I think real estate investing is still great. I still think it's the thing to do it. I invested through the highest of highs and the lowest of lows. So I bought all the time. I don't believe in waiting till the crash happens because that's when all the fear is in the market and nobody executes, or very few folks. So I want you to get started. I want you to do your homework. I believe in this so much. I spent 90 days of my life putting together an online course called How to Get Started One Rental at a Time. And I give it away for next to nothing, right? I even give you a coupon code for $50 off called WEB50, WEB50, because I want you to get the lowest price available. But when you get that course, you join our private Facebook group, all that good stuff, you're going to be learning exactly what we did to learn a market that we never been to see the logic that we have. And again, I give all this away for free here on this channel because I really do want to help people. It doesn't bother me if you watch this and you get all of this for free. Absolutely okay. That's what this channel's for. If you want to see our story, the best way to do it is in this book. And then if you really want to hold yourself accountable, join a community of other investors that are starting out, you got to buy the course. With the coupon code, it's $149. It's next to nothing for you. It's really going to answer the question of what's a bad, average, good, and great deal. So with that, no more pushing that. I want to go through a single family home, a duplex, and a fiveplex. In my market's Fresno, if you follow this channel. I'm in the market all the time. I've already added 18 units to my portfolio this year. So I'm not some guru out there who's not doing this anymore. I'm buying assets all the time. So these are deals and numbers I'm looking at right now. And really the gist of this is to just lay it out. I'll tell you the punchline now. I think the single family homes are the better market just today. Maybe that changes in the future. But again, let's talk about it. Let's look at it together. And let's hope technology behaves itself. So we will share this PowerPoint. We will move this up so I could see. Okay. So we're going to compare and contrast. When I say SFH, that stands for single family home, duplex, and a fiveplex. So again, we're going to answer the question if more is always better. We're going to talk about market cycles and investor interest. I think investor interest is code for the herd, this herd of investors. I believe when there's a herd mentality, values of certain asset classes could get inflated. Specifically, think single-family homes in 2008, for example. We're going to talk about single-family homes characteristics. We'll talk about duplexes because there are some differences that you as an investor need to know. And I think this more is better attitude from people that just read the headlines. I think there's some things here that are going to surprise you. So I don't want you to be surprised. And then we'll talk about a 5-unit complex as well. And then lastly, I have a slide comparing them. So, we'll go through it in detail together. And then you can make your own decision. And again, the market I'm in is Fresno, California. I believe what I'll be saying in these statements, I believe is generally true in all markets. I could be wrong. I don't know all markets. And the price points and rents are obviously for my market. You can insert your own market and your own variables. I'll do my best to call those out as we go through this. So I hear it all the time. Michael, give me multifamilies. I get calls from brokers all the time asking if we want to sell our apartments and things of that nature. And I have to tell you, I have put some stupid prices on some of our apartment buildings, and 2 out of the 3 got snapped up. I mean, I'm talking 25 to 30% overvalued, and people have paid them. They're in escrow, so we'll see if they close. But if they do, great. If they don't, no problem. We'll keep them. They cash flow like crazy. But again, if the market's going to overpay and people are going to pay 30% more than something's worth, I'll gladly give it to them and then let them lose it in 2 to 3 years. I think there's a general, people that read headlines, they follow Grant Cardone. They always think bigger is better. And if you take my course, you'll quickly learn that I have one calculation that I can compare a condo with a 20-unit apartment building. Everybody goes in the same spreadsheet every opportunity, and the spreadsheet tells me what to do. And my spreadsheets today are telling me that houses are better values. So guess what? I'll buy houses. Thank you very much. There's a saying that, hey, vacancies, when you have multifamilies, you're never fully vacant. Something's always paying your mortgage. And again, people who say that don't own this stuff. Here's the deal. If you have a duplex or 5 units and you have a vacancy, you know what else you have? You have a $2,000 to $5,000 turn. So guess what? Not only is your mortgage not being paid, but you are taking cash out of your pocket for the turn, and you're paying the mortgage out of your pocket. This is what annoys me. All these people that say bigger is better, they must not own these units, because when I get a vacancy in a duplex, I don't go, yay, I got half my rent paid. I go, shoot, I have a $2,000 to $4,000 repair coming, and I'm going to have 2 to 3 months of no cash flow. It just bothers me. I want stuff where people want to stay. And people, as you'll see in a minute, stay in houses longer. Turns are what kill you in this business. It's not bigger is better. I mean, come on. And then when the economy turns and people who live paycheck to paycheck in these apartments, they're going to get hurt first and get hurt the hardest. So please, bigger is not always better. So I'm going to share my experience with single family homes, duplex, and 5 units because I think that's where lots of people are that are follow this channel. So let's do it. So here you go. So single family homes, they offer the most flexibility on exit. So if you get in the business, you try it out, you don't like it, or you want to get out, you want to raise capital, whatever you want to do, single family homes are easiest to sell. The reason is because you generally have the entire market. You have investors, and if the condition is right, you can sell to owner occupants. So you have the most buyers. And again, with the most buyers becomes the most expedient way to sell, generally speaking. In my experience, my average tenure in a house is 8 years. Actually, it's over 8 years. So think about that. And you'll see this in the next 2 slides, because a duplex is not 8 years and a 5 unit is not 8 years. Turns are what kill you in this business. Again, when somebody tells you a duplex is half full, you should feel bad for them because they've had a $2,000 to $4,000 expense. That's what people don't tell you, and that's a shame. Another one that's a shame is single family homes, generally speaking, have the least amount of drama because they're not surrounded by other tenants, right? They don't share walls. They don't have people on their driveways. Generally speaking, houses are self-contained. They have their backyards, side yards, front yards, generally speaking. So the drama, just the daily life of life, generally speaking, with single family homes is the lowest. And here's an important one. Again, people don't tell you this. Sure, maybe your duplex has $250 more in income. Great. Well, guess what? You also have $250 more in expenses, minimum, because you are responsible for water, garbage, lawn maintenance, and maybe other things because you're the landlord and you can't split water or you don't split garbage or whatever, right? So if you collect an extra $250, but you have an extra $250 in expenses, do you really have anything? And oh, by the way, water, garbage, lawn can go up and down. It's variable. So some months you're ahead, some months you're behind. This again is stuff that people don't tell you, and why in today's market, single family homes could be the best option. So a duplex. So again, generally speaking, you're going to be selling to investors. You may be selling to someone house hacking or any of that. I would say that's an investor also. So the pool of buyers is smaller. In a duplex, now let's just qualify what I mean by a duplex here. It is a duplex where walls are shared. It's not two houses on one lot that are separated by 20 feet. This is a duplex where at least one wall is shared. That's what this is in this duplex. So my general tenure is under 5 years, so 3 years less. And again, a turn is what it hurts landlords. Drama can flare up at any time. There's only two, or generally two families. So it might be great for years, but it could flare up anytime. I've had things flare up at Christmas time, at Super Bowl parties. You just never know what's going to happen where drama can flare up. And again, owners are responsible for these extra expenses that people don't tell you about: water, garbage, lawn, and other things, maybe in like snow removal or something if you live in the Midwest. Again, check your market out, but this is what's important to me. So Fiveplex, absolutely going to be investor only. In fact, you'll be commercial financing, so the financing is even different. Lowest turn, again, a Fiveplex here is 5 units connected. So every unit has at least one shared wall, and 3 of them have 2 shared walls in this example. So very, very quick turnover. Drama is guaranteed, and guaranteed probably every 90 days. 5 families together, 5 sets of cars, 5 sets of kids and relatives and friends, and drama. An owner pays all those same expenses, except now they're much, much bigger, right? It can be, I have seen expenses over $750 a month in a Fiveplex. People don't tell you that. In the Fiveplex I'm looking at here, because again, this is a real deal, the monthly expenses exceed 1 month's rent for one of the units. So really, what am I doing? I'm really buying a 4-plex because the 5th unit pays all the other expenses. Again, people don't tell you this, and that's a shame, but here we go. So let's build this out. So here's your single family home in today's market of Fresno, California. So for a 3-bedroom, 1 bath, I should have put that there, 160 grand. Right now, rent's going to be about $1,150. And what I mean by extra expenses, it's just that: water, garbage, lawn care. In a single family home, those are all on the tenant. And then let's just say your turn's 7 years out. Note, I had to put this here so I don't get hate mail. You still have the usual expenses in all 3 examples: mortgage, taxes, insurance, repairs, reserves, all that stuff. So here's your duplex. Today's market, 200 grand. Rent, roughly 1,400. But bingo, extra expenses, 250 plus or minus. And now you have average turn of 4 years. So comparing this duplex and the single family home, you really haven't gained anything. In fact, you're losing money because your mortgage payment's going to be higher unless you put a lot more down. So again, people aren't telling you this, and that's a shame. I don't know why, but it's true. So here's a Fiveplex I evaluated 2 days ago. 380 grand. It's all 1 bedroom, 1 baths, 5 in a row. So everybody shares walls. $380,000. Rent's 3 grand. Extra expenses are at least $750. I didn't even add extra insurance or anything of that nature, but just think, the extra expenses exceed 1 rent. And I have units like this. The average turn is just over 2 years. And again, same deal, right? Mortgage, taxes, insurance. So the reason I wanted to compare and contrast this is I'm here to tell you that bigger is not better. If you're getting started in this business, I implore you to follow someone who's done it before. I've created this course. I've given you a coupon code. I believe it's an extremely good value and will save you time and money. But if you don't follow mine, it doesn't hurt my feelings at all. Make sure you do something, because you got to follow somebody who's telling you the truth. And bigger is not always better. I think in 2008, bigger was absolutely better. In fact, bigger was underpriced, while single family homes were overpriced. I think the reverse is true today. I think, generally speaking, affordably priced homes are undervalued and multi-units are overvalued. And this is just one example. So again, leave a question below, leave a comment. There's my email, mzuber@onerental@a-time. If you have any questions, I'd love to hear from you. I hope that made sense. I really am on this channel trying to help people. I know there's a lot of new people out there. Um, I wrote about all of our journey in here, how we went from a single family house to lots of units. I've created a course that really allows you to do your homework, understand what a bad, average, good, and great deal are. Please do something. Protect yourself. You should be, you and you alone need to understand what a good deal is. You should only do good or great deals. Don't do a deal just cause. This is not the market to do just cause. If it was 2014 or 15, you had all this cushion and upside, probably okay. It's not that market anymore. You need to do good or great deals. I've built a course to help you do that. If you don't follow it, no problem, but follow somebody, because if you don't, you're going to get hurt. All right. I hope that makes sense. You have a great day. All right. Take care.